Hello, everybody. Okay, well, it is the revenge of the bulls today, and boy, did they get revenge. And I will talk about that, kind of give you an update. Before I do, I don't look at gold very much at all, don't trade it either. But today, when I was looking, it just so happened to be on gold in this one. I was wondering because I noticed it got real close to this line. I'm like, what is that line there? What is that all about? I had to go all the way back to a weekly, and this is basically the bottom of this range for the past couple of years. Here was the top in the glorious days when gold was approaching $2,100, so it double topped. And then this is the supporting range, which was intact until a couple of weeks ago. And, it's kind of makes a lot of sense that with today's complete surrender by the Bank of England and the mayhem it caused all around the world, that the best gold could muster was to cough and wheeze its way back toward major resistance. I mean, like almost to the penny. If it fails to get above that line, it'll be real interesting because I think that'll be extremely homogeneous situation for a lot of assets. But, it's been an interesting ride the past 24 hours because when, yesterday afternoon, it looked like that after 6 days in a row of bearish wonderfulness and just fell and fell and fell and fell. I figured, well, we'll get a little rally at some point. But then Apple, it turns out, turned weak. And so the NQ fell. And it was, I literally turned all my screens off and walked away. I did not want to get wrapped up in the idea of oh my God, this is so easy. It's like printing money. And this is so fantastic that every day the market falls. As much as I usually enjoy looking at red numbers, I shut everything off and made a point of not looking at any quotes at all, until the next morning today. What a surprise I got, because whereas I was thinking, I've told you that I usually, start the day with great apprehension and nervousness and so forth. And when I woke up this morning, I was like, oh boy, oh boy, oh boy. And of course, everything was green. It's like, wait a second, what just happened? And of course, the Bank of England happened. And they have thrown in the towel and they've capitulated and pivoted, whatever word you want to use. And so we got this, how much is this? I want to say like 500 points. Let's take a close look. I'll just say one of the nice things about slope charts is that we have very sensible numbers. I mean, look at these ridiculous values in the y-axis, 11215.14. I mean, good God, sloppy programming. So it's very hard to tease out quickly the arithmetic here, but it was basically from 11,140 up to 11,6. Yeah, just about 500 points on the NASDAQ reversing. And so in spite of the fact I was whining about taking profits yesterday, goodness gracious me, I'm glad I did now. That cash feels awfully good, not being subjected to this kind of nonsense. And this morning, as I mentioned, and I mentioned a little deeper detail in the premium post, that I eased back on energy some. And so I've raised a goodly amount of cash. It wasn't a good day. I mean, I'm not pretending this was a good day. I lost about 8%. But given that it's purely long put options, going down 8% on a day when the NASDAQ does a 500-point reversal isn't too terrible. I could make that all back up with an opening bell if things fall my way. So wasn't a great day at all. First losing day in a while. But that's okay. It's part of the game. What else do I have to say? Let's just look ahead. Let's look at the ES some. The ES in recent days tried time and again to get above this level. And it finally made it today. Interestingly, in the final moments it sank back down to that level, but it did manage to kind of reach escape velocity right here, because beforehand, it would approach and retreat and approach and retreat and really retreat here. I went way down here. So, had I ambled in my home office in the wee hours of the morning, I would have been very excited, because we were down at like getting to 3,600, and this went blowing like 150 points higher. Just unbelievable. But the thing is that, it's all very cute that this got bought up, and it is kind of a relief that the oversoldness has been eradicated to some degree, and the whole "everyone's a bear" canard, maybe that'll settle down. But the thing is that this is not a smooth, clean, uninterrupted line down. It is a violent sawtooth, like so. Some of the sawtooths are quite minor. Some of the sawtooths are huge. The most soul-crushing one, of course, was this 2-month son of a bitch from June 16 to August 16. And then we had our reverse, the bear image of that, like so. And in recent days, even got below the level seen in June. But what I'm saying is that, this darling little salute to England, which I guess was a very important economy in the 19th century, now it's basically a financial center. This bounce is all lovely and peachy, but it's going to hit a lead wall of overhead supply, as well as the fact there's a Fibonacci retracement there. Because as we go to the weekly chart, there ain't nothing bullish about that pattern, unless you want to say, well, it's cheaper than it used to be. Okay. But this is a very important and powerful top. And the fact that the only reason for the rally is because of this the pathetic surrender on the part of a central banker, which of course spreads the notion that, oh, well, they'll all surrender soon. I think this will be another error on the bull's part. Could it continue? Well, sure it could. In fact, this very weekend, before any of this started, I specifically said that I was looking for a rally toward 3,800. And that wasn't a magical fairy, didn't deliver that. I was simply basing it upon, first of all, it's a big round number, and the fact that it's a crucially important Fibonacci there. So sure, it could keep hacking its way higher. But for me, if you look at things like crude oil, that really tells the story, because this is an enormous and powerful top. It is an endless series of lower lows and lower highs, the very definition of a bear market. And with today's rally, and my premium members, saw that I sent an image out with this line, this very line at 82.40 as an important point of resistance. And it got up, goodness gracious me, it got up to 82.34, so literally 6 pennies away from that line. Then it started turning south. There's nothing magical about these. If this goes to 82.73, it doesn't mean, well, bye everybody, this is a complete disaster. No, it's kind of nice that it didn't do that. But, we have to give some allowance for a little wiggle here and there. So anyway, I'll just wrap it up. As I end the day here, as I said, I took 1/5 of my entire portfolio yesterday out, shoved it in my pocket. With the remaining cash, I still have 20% cash on the sidelines. The other 80% is scattered amongst 28 bearish positions. I beg your pardon, 30 bearish positions. I was tuning so much, I'm trying to remember if it was 28 or 30. It hardly matters, does it, though? Let's call it, actually, I think it's 28. So 28 positions. And the earliest any of them expires January 20, 2023. So this day ain't gonna break me. All right, that's it for me. I hope you survived, and if you're a bull, well, I won't say what I really feel, but I hope you had a good day. I'm sure you must have. So I'll see you guys tomorrow.